In today's video, I'm going to talk about portfolio setup. There is always a debate on how many stocks are considered as too much in a portfolio. Also, is it a must to diversify the portfolio? In this video, I will go through some of these points. Also, stay tuned at the end of the video to know what is my model portfolio. Hi all, welcome to my channel on Canadian dividend investment. In this channel, I talk about everything related to Canadian stock market, mainly a walkthrough of my Wealth Simple Trade portfolio and what all stocks I'm buying and why. I also cover some in-depth analysis on why I selected a stock over another. Please note that I'm not a financial advisor. There are financial risks associated with investing. Therefore, do not act or refrain from acting based on any information conveyed in this video. Since we covered that part, today I'll go through how I had set up my portfolio. So the first question is, how many stocks are required in a portfolio and how many is considered as too much? There is no straightforward answer to this. There is no magic number. Some say less than 10, whereas some people say just around 20. But I completely disagree with those. In my opinion, it all depends on the person who is maintaining the portfolio. If a person have time and will to follow 40 stocks closely, then definitely that person can have all those 40 stocks in his portfolio. Also, a person who have one stock in his or her portfolio can have a better returns than a person who have 20 stocks. So there are a lot of factors that involve. Let's look at those one by one. The amount of time you spend looking after your portfolio. A person whose job is managing a portfolio or one who is working in that field will have enough time to go through the market, understand what is happening on a daily basis. That person can easily manage more number of stocks than someone who hardly find time to look at his portfolio. So if you are a person who don't find time to read the market news, look through each stocks to pick the correct one, then it's better to have few number of stocks. Your level of expertise. A person who is very experienced in stock market may be able to manage more stocks than someone who is new to investment. That is the reason why most people recommend newbies to invest in ETF rather than going after individual stocks. And as you gain experience, you can get yourself exposed to stocks and then you will be in a position to understand how many stocks you are comfortable managing. The quality of stocks you have in your portfolio. Let's say you are investing only in aristocrat stocks. Then we can argue that irrespective of A, you don't have enough time to manage the stocks, or B, you are new to investing, you can have more number of stocks in your portfolio. But there is always a risk factor of having a stock in your portfolio and leaving it there without following it. You never know when a stock can go down. Even the stable stock for 20-25 years can go down within a year or 6 months or even less. But yes, having a blue chip stock in your portfolio is always less riskier than having a mid cap or small cap growth stocks and not following them. In my opinion, there is no magic number of stocks that you can have in your portfolio. The second question is diversification of portfolio important or not? In my opinion, it's not important, but that is the safest option. Let's say a person invested $10,000 in Tesla during the year 2020. At the same time, another person invested the 10,000 in 10 different stocks from different sectors, including Tesla. The return gained by the first person would be greater than the second person. So it is possible to attain a good return without diversifying the portfolio. But the opposite can also happen. Someone who invested only in cannabis sector would not be doing good now. So diversification helps in reducing the risk. In all the above scenarios, we talked only about investing. What if there was an emergency and your emergency saving money is not enough? You want to sell some stocks and use that money for this emergency purpose. And let's say all your investments are in renewable energy sector. Right now this sector is not doing well, but you believe that it will grow in future. Now you are forced to sell some part of your investment for loss. But if you had diversified your portfolio and to say, like, along with renewable energy, you have oil and gas, banks, etc. You could sell the stocks that are in profit from a different sector. By that way, you're not incurring any loss. So personally, I'm a huge fan of having a diversified portfolio. Now let's look at my current portfolio. This was not how I planned my portfolio to look like, but it's only my first year, and as I invest more, I want this to look closer to my model portfolio. Currently, majority of my investment is in energy sector, 39%. The second is financials, which is 28%. And as a Canadian investor, it's obvious that most of the investment will go into these two sectors. Canadian banks for me is the safest dividend stock to own, and though energy sector had its ups and downs, it is currently one of the best sector to own. The next is materials and utilities, 7%, and then industry, ETF and REIT at 5%. Communications at 3%, followed by healthcare at 1%. It is a diversified portfolio, however, it's not a balanced one. Now let's look at the model portfolio which I'm targeting to achieve. The biggest sector is financial because of the reasons I mentioned earlier, followed by energy, utilities and ETF all at 15%. REITs at 10%, communications at 6%, materials at 4%. The rest sums up to the 5%. So looking at this target portfolio, it's evident that I have to focus my investment at certain sectors to bring my current portfolio to match with the model portfolio. So this year I'll be focusing more on my investments on utilities, ETF and REITs. As for the stocks, I have 19 different companies in my TFSA portfolio. I will be adding 2 or 3. I believe anything more than that will be too much for me to maintain. These are the current companies that I have in my portfolio. As you see, I have 3 companies, Enbridge, BMO and Manulife, with an investment over $1,000. So one of my target for this year is to bring other companies into this 4-digit bracket. It doesn't mean that I will not be investing in these 3 companies anymore. BMO, I don't think so, as I have more than 100% returns. Now, I won't be adding more into it. I will just reap the dividends. And also, as I mentioned, I'm looking forward to add into other sectors. For example, ETF. The ETF I have here is QQC and XIU combined together to make only $500 worth of investment. So this too, for sure, I'll be investing more to a $1,000 range. And that will also make sure that my sector allocation matches with the model portfolio I have. Another sector is utilities, and I have only renewable utilities here, Algonquin and Transalta. So I would probably add a stock like Fortis, which is, in my opinion, is one of the amazing stock for dividend investors, and also will add more into this renewable energy stocks. So that will also bring this sector to the desired allocation. Another sector is REIT, where I have less investment, Ryokan and Smart Senders combined to less than $500. So an additional $500 each on these two for this year would be what I aim for. Then there are the stocks like CIBC, Bell and Canadian National Railway, which I would love to add more. So the $6,000 to $8,000 that I'm allowed to invest this year, I'll be splitting between these 10 to 12 stocks. So this is going to be an interesting 12 months. I'm looking forward for this. Hopefully everything turns up as I planned. I'm interested to know what your investment strategy is for 2022. Do you have any specific goals, any specific stock that you are looking either to add into the portfolio or increase the holdings? Please do share that in comments. That is it from me for today. Take care.